I'm not sure that I could stand up here today and guarantee you that blockchain technologies are going to be hugely transformative in the automotive finance world, but I can stand up here and tell you that blockchain technologies are going to be hugely transformative in the financial services industries in general and in your daily lives. I think that may be a foregone conclusion already, given the amount of investment and activity we're seeing in the space. I guess by show of hands, how many people either got to the airport or maybe got here via Uber or Lyft or one of the ride-sharing services today? And trying to get the how many people? I didn't see. So it's a fairly significant number of the folks in the room. So I'm going to tell you that perhaps Uber may already be disrupted. Does that surprise you that Uber may already be disrupted? So let's talk about a company called Arcade Fire. Show of hands, anybody's ever heard of a company called Arcade Fire? I know at least one person is because I had a conversation with them before. So I see two people in the room who've heard about Arcade Fire. So we started the world with horse and buggy, maybe, and people walking. Then there were some stage coaches. That was kind of the shared economy model for people getting around. Then there were taxis. Then Uber came along and disrupted the taxi industry. Now we've got a company that maybe two people in the world have heard about, two people in this room have heard about, called Arcade City. Arcade City is a company that's attempting to disrupt even Uber, which is a shared economy platform using blockchain technologies. And how could blockchain technology fit into it? Well, we're going to talk a little bit about that today. But Arcade City was actually formed in reaction to some dramatic pricing activity that took place in many cities around the world. And I'll read you a little bit about Arcade City. New driver-owned ride-sharing startup Arcade City launched its mobile app this month to the Apple and Android App Store. Drivers have given more than 1,000 rides to customers in 100 cities across 27 states in Australia. Arcade City has begun integrating its service with blockchain technology using a decentralized application platform called Ethereum, similar to Bitcoin, but more sustainable for governing peer-to-peer interactions. Arcade City will use Ethereum to issue crypto equity, what the heck is crypto equity, to drivers, allowing them to own up to 100% of the company. So now the drivers seemingly are going to own this company. Launched in the aftermath of dramatic rate cuts by Uber, Lyft, that decimated driver take-home pay up to 40% overnight and with no warning, Arcade City quickly signed up more than 3,000 drivers, most of them current or former drivers for the big two ride-sharers. Arcade City lets riders review their driver profiles in advance, choose the drivers they prefer. Drivers are free to set their own rates, offer additional services like deliveries or roadside assistance. Approximately half of current drivers give rides on a pay-what-you-think-is-fair basis. All this based on a technology called blockchain. So that's what we're here to talk about today. A little bit of background on myself. I lead the fintech practice for PwC. Blockchain services is one of the areas that I'm responsible for at PwC. And in my job, what I do is I help incumbent financial institutions, many of you here in the room, the largest financial institutions in the world, consume emerging technologies. And blockchain is one of the technologies that we think is going to be most impactful in financial services and in many other areas of our daily lives in the next 5 to 10 years. Hence why I spend about 25% of my time in this area. But let me tell you a little bit about when I got interested in blockchain technologies. Probably sometime in the late 70s, early 80s, I was very interested in this topic. Well, considering it wasn't created till around 2009, you may be wondering how we reconcile this time period. You see, my mother was a title checker. I grew up in Charleston, South Carolina. My mother was a title checker. So that means I spent a lot of hot summer days in the office of the Register of Means Conveyance in Charleston, South Carolina. Does anyone know what the office of Register of Means Conveyance is? It is the office where you go in and you check titles. And Charleston is one of the 13 original colonies, so it goes back to the original land grant. And as a title checker, my mother's job was to go in and ensure that the title that Mr. A was selling the property to Mr. B was in fact good and there were no defects in the title. similar to the auto finance world. You have to make sure that the conveyance of the vehicle was good and recorded properly. And as a little boy, I had to sit there and, hot summer afternoons, couldn't bring a soda or chips or whatever into the office, and had to sit there in a centralized registry. Right, this is a centralized registry that the government maintained of all the titles, and my mother's job was to make sure that people were in fact conveying title properly to things. So here I am, a young boy, thinking to myself, boy, wouldn't it be nice if little boys didn't have to sit in hot title offices? And wouldn't it be nice if somebody came up with a technology that allowed little boys to go out and play and not do this? So as a 5, 6, 7-year-old, I envisioned that one day somebody would dream this up. So in 2009, Satoshi Nakamoto realized my dreams, and we'll talk a little bit more about this. But in the beginning, man created databases to manage these type of things. And I say in the beginning, man created databases. I argue, I guess, it wasn't these guys in IBM punch card rooms that originally started this. Probably it was things like the big book journals that my mother would pull out, and I would help her pull out of the Register of Means Conveyance office that were the original databases. These huge ledgers that we had to manage and still manage up until this very day. So that's the origin, and we'll talk more about very shortly about how blockchain companies started are starting to disintermediate some of these concepts and why they're going to get impactful to all areas of our lives, including potentially auto finance. But in the beginning, there were databases. And they permeate all of our lives in auto finance. I can't imagine that any of us could do our business in what you guys do without this. I wasn't even born, right, when these things were created. But in 2009, along came Satoshi Nakamoto. Nobody knows who Satoshi Nakamoto is. There's a lot of theories about who or she may be. But as we're coming out of this crisis here, Nakamoto comes along and gives you a hypothesis for a way that to instill trust back into a system that is desperately crying out for trust. Problem is, how can you ensure that two people who don't know each other deal amongst one another in a fair and honest way? Interestingly, now you think about what was happening at that time in the world, people were kind of very much still stinging from what had just happened in the capital markets, right? There was no transparency in the system. The mortgage meltdown had just happened. You had, if those of you who watched The Big Short, read The Big Short, kind of understand what had happened, you had the synthetic CDOs and CLOs and CROs and CD whatever, yada, 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 O's created, and there just no transparency in the world. Nobody trusted anybody. So somebody said, you know what we need? We need a lot more transparency in the world. And so Satoshi Nakamoto, whether knowingly or unknowingly, came up with potentially what was a solution for that. But out of this solution came something that didn't really seem like it was going to, provide shed this light of goodness and transparency. Out of this solution came this, right? What does everyone associate blockchain with? When I say blockchain, a lot of people think, oh, Bitcoin. Ooh, Bitcoin. If I say Bitcoin, do you have kind of a negative connotation with Bitcoin? Does that sound like, oh, that was Ulrich being arrested in Silk Road and Mount Gox, right? That's bad stuff, right? Is that an association you have with all that stuff? Well, the internet. Will anyone in this room stand up and say the first time they used the internet, they used it to find their local church? Was that the original? Was everyone's original use cases for the internet? Was it all good and pristine? And was that what it was used for? GPS, right? Many of our apps are GPS based. Was GPS? And anyone know the original use case for GPS? It was for bombing the hell out of people, right? It was for fighting. I'm not going to tell you what the other main F word that ends in ing was that the internet was created for, right? But there's a lot of things that real technology, that the original use cases of technologies are used for that aren't exactly pristine, right? So Bitcoin was the original use of Bitcoin was to find a way that people could transact business one another fairly, honestly, with transparency, but anonymously. And the concept of Bitcoin was the original, sat on a technology called blockchain. And we're going to get into what blockchain does now. In 2009, Satoshi Nakamoto issued this paper, and it actually took a full year before the original transaction happened on the blockchain. It was, I believe, in May 2010, referred to some as Blockchain Pizza Day, because the original transaction in Bitcoin currency was two pizzas. The value of the transactions at that time in Bitcoin was, I believe, $12 to $15 something now. It was, I think, 400 or so. I can't remember the exact number, 400 Bitcoins. In today's value of Bitcoin at $400, it was 10,000 Bitcoins they transacted in. In today's value, it would be in the millions. Believe it or not, Bitcoin value today is, I think, in the 400s. It would be $4 million or something of that. But back then, it was worth $12 to $15, which would be roughly the value of a pizza. But what people realized is, so this early use case, much like some of the early use cases of most of our powerful technologies today, like GPS and like the internet, perhaps was used for some nefarious things, like Silk Road, perhaps transacting, for some nefarious things. Mt. Gox, you had some people, steal some of these bitcoins. But what people came to realize was that the power of the underlying technology of Bitcoin was pretty powerful. Two very important things came out of it. One is that Bitcoins, unlike dollars, the dollars we have in our pocket, couldn't be counterfeited. They couldn't be counterfeited. Never have been. If you remember what went on with Mt. Gox, there was a whole Mt. Gox and a whole the things you might have read in the media, was that people left the front door. These Bitcoin transactions, people had stored. Bitcoin is, let's just call it for purposes till we get to a little more sophisticated analysis of what the blockchain does. Let's just call it it's an electronic store of value. And people had taken their electronic stores of value and they had put it in Fort Knox. And that's what Mt. Gox was. It was a wallet that held these electronic stores of value. And what happened was in Mt. Gox is people left the front door open, for lack of a better word. They left the front door of Fort Knox open. And so other people said, oh, the front door is open. Let me go in and take the money out. But what they didn't do was, and they have never done until this day, is they never counterfeited it. Nobody ever has been able to replicate a Bitcoin. Nobody ever is able to say, oh, that electronic store of value, I'm going to photocopy it, much like you can do with currency. You can, if you're good enough, you can photocopy it. Now, it's not issued by a photocopy of a dollar bill is not issued by the U.S. government. But if you're good enough, you could actually take the crane paper that makes up a dollar bill and you could counterfeit a currency. Nobody has ever been able to counterfeit a Bitcoin. So the underlying technology that sits behind this stuff is pretty powerful. So what happened very quickly, and now we're sitting here in 2016, is that as people started looking at this, particularly the financial services world, they realized that this Bitcoin stuff, that there had to be something behind this. So what happened is, this is what has started to happen. And I think, most people in the financial services world, it took about 2 or 3 years for the financial services world to wake up and go, something going on here. But it's kind of gone like a hockey stick. And we'll talk about some investment numbers later of this hockey stick effect in the investments in it. But now look what you're seeing. You're seeing things like central banks. We have the Bank of England recently announced that they're creating their own currency. The World Economic Forum highlighting what's going on here. Virtually every major financial institution in the world is making substantial investments in this. And there's over 1,000 startups in the world who are playing in this space. Actually, we at PwC follow 174 of them just in financial services alone who actually are materially impacting this space. So that's kind of the shift, so to speak, from the early days of the Bitcoin technology and the Satoshi Nakamoto protocol to where we're at today, which is the adoption of it in the financial services world, and we'll talk about some of these use cases, to how we're actually going to see it transform or potentially transform virtually, I wouldn't say every area of our lives, but many particularly areas which databases are not working very well today. I'll give you one quick example is voting. Voting right now, I think we had some problems a couple election cycles ago, Bush v. Gore, right? We had some voting problems. I spent 20 years in Chicago. Chicago known for vote early, vote often, voter fraud places, emerging markets where identity is a major problem in elections. Voting is an area where databases, identity, trust and transparency, big problem. So let's talk a little bit about what is the blockchain. Now, this stuff gets hyper technical, and what I don't want to do is get into the the nerdisms, the hyper technicality of this, because I know I tend to lose audiences on this pretty quickly. So what I like to do, and I know you guys have had a lot of fun engaged. I saw you play Family Feud a little while ago. You guys want to play another game? Is anyone interested in playing another game in the audience today? Okay, everyone stand up. Everyone stand up. Everyone. All right, we're gonna play a game. Okay, we're gonna play a memory game. All right, we're good at memory. All right, I'm gonna say a phrase, and you guys are gonna repeat after me, and then I'm gonna say another phrase, and we're gonna stack those phrases on top of each other. And when you screw up, you're gonna sit down. So one hen. One hen. Okay. One hen, two ducks. One hen, two ducks, three squawking geese. One hen, two ducks, three squawking geese, four Limerick oysters. One hen, two ducks, three squawking geese, four Limerick oysters, five corpulent porpoises. Whoa. One hen, two ducks, three squawking geese, four Limerick oysters, five corpulent porpoises. One hen, two ducks, three squawking geese, four Limerick oysters, five corpulent porpoises, five pairs of Don Alverzo's tweezers. Nobody's left standing. This goes to 10, by the way, guys, okay? And it gets much longer. Okay, why did I make you do that? Because that's what the blockchain is. The blockchain is a series of longer and longer and longer and longer additions to a series of nodes around the world. So let's pretend you all were computers around the world. We'll call them nodes. We'll call them mini databases for purpose of now. And you're spread out around the world. So each one of you is a computer or a node or whatever we want to call it around the world. And as a transaction gets entered around the world, and let's call a transaction was every time I added another series in that series, each one of you had to add it to your database around the world. So there wasn't one centralized registry. I didn't say, hey, you guys sitting here in the front row, you're going to maintain that list. That list that I just started, you're going to maintain it, and we're all going to go ask you to check that list. Every one of you in the room, you all had to maintain that list. So the first thing is, you all have to maintain it. Now, the second thing is, if I want to add a name to that list, what you all have to do is you all have to maintain it. So every time I had it, you're all going to keep adding to it. Now, if anybody screws up, you're out. So as we're adding names to this list, we all have to maintain the same list. So if anybody doesn't have an exact match to that list, that means that something is wrong. So what we're going to do is every time we add another line, and trust me, I can do it up to 10, and I assure you it gets much harder as this game goes on. If you don't match to that list, that means there's a defect and you're lying. That means that something's not right, you're not matching up to our systems, and you're lying. That's what the blockchain is. It's a series, and it can go up in the blockchain world. What you're doing is adding thousands and millions and millions and millions and millions and millions and millions onto these computers, onto these nodes, and we're checking with everybody in the world every time we add a transaction onto this. We're checking the systems, and if somebody tries to add a false transaction into the system, we know they're lying. We know that something's not right because we're checking with every node in the world. That's in essence what the blockchain is. It is saying we're not going to go to one person to check whether a transaction is true. We're going to check with every computer in the world to see if their records match with our records. And anybody has the right to add a new transaction into the system But if that transaction and the 1,001 million transactions in the stack doesn't match up, something's not right. So we're all going to together maintain the database collectively. That is a decentralized ledger as opposed to a centralized ledger. Does that make sense? That's what I'm trying to illustrate here on the slide, which my people wrote, which is even too complicated for me to understand. Okay? That is what the blockchain is. And that concept can be used in many, many, many different ways. All right. So here's some slang in here. So hashing. I want to talk about hashing for just a moment. If I were to ask you, hey, honey, where did I leave my car keys? You could tell me, well, and I called you on my cell phone. I said, hey, honey, do you know where my car keys are? My wife could say, okay, well, let me tell you. Let me drive home from work. I need to take the 101 to Ocean Avenue, make a right on Ocean Avenue, pull into the driveway, walk up the front stairs, and up the front stairs, go to the bedroom, and make a left, and on the end table, 4 meters, and she could give me a long series of directions as to where my car keys are. Or she could simply say, oh, they're on the nightstand, right? 2 different ways of answering where my car keys are. What hashing is a way to answer very succinctly to a computer in its memory. Instead of giving a direction, a very long string of directions, it's a way to say to the computer, your car keys are on your nightstand. And the ability to do that, combined with something called encryption, which is the code, when you marry up hashing and encryption, that is what the 2 technologies that go together in the blockchain form. The security together is this database. So it is the database, this whole long thing we just talked about, that combines a very fast way to find your car keys in the database with the encryption, so a security element, because we don't want everybody having the ability to go look at the database together. We may want some people looking at it, and we also may want to, if I'm spending money, for example, these bitcoins, I need to tell people we can't just randomly go in and take your money out of his account and move it to Joe's account. We need some way to say who can and can't do that. So perhaps the best way to do that is with a set of keys, right? Important thing to talk about, the recent Apple, the whole debate over the Apple iPhone and the encryption of that iPhone, that ties into encryption. That's the exact thing we're talking about with encryption. The government could not have gotten into that iPhone with brute force. The technology is not out there right now with a battering ram to get into that iPhone. That's why they needed Apple to build just a set of keys. All they were asking for Apple to do was build a set of keys. Because even a quantum computer right now, with the off-the-shelf encryption technology that is out there, the government could not have gotten into that phone with a battering ram. Why? Because had they used the battering ram, the phone would have just locked itself out and they wouldn't have been able to get in. But even without that feature of turning off the phone or wiping the phone, the most basic basic encryption technology we have out there today is just too strong. It's too good. Our encryption technologies are too good. So when you marry together hashing and encryption, that's kind of the fundamental basics of the blockchain technology. The blocks I've already described to you before. Cryptocurrency are things like Bitcoin. Smart contracts are things that we can build, things like getting rid of things like escrows. I think most people in this room here knows what escrows are. But once you start having these elements of hashing and encryption and blocks, what we can start doing is building things like contracts without lawyers. Right? I don't know if we want that. I actually happen to be an attorney by background. I don't know if we want that. But we can actually start building contracts that execute themselves without lawyers' presence. Did A do B? Yes. Did A execute on what he said he was going to do? Yes. Therefore, here is a key that does it. And therefore, let's let the 2 parties contract and deliver the money without the lawyers being present. And miners and nodes, mining is actually the activity, the computational activity that's required to hash the transaction and make the encryption happen. And the nodes are the computers on the network. So that is a little bit of the technology behind what's going on in blockchain. when do you want to start thinking about applying these technologies in your business? Because we're still very much at the early days. We are not, the internet today is you pull out your phone and you make a mobile banking transaction. That's what the state of the play in the internet today is. But for those of you in the room who are old enough to remember, there was a period between DARPA creating the World Wide Web and the people who came together to create the World Wide Web, and let's call it the green screen of CompuServe. And that period, before we actually had a commercial applicability of the internet, we are probably at that period right now in blockchain technologies. We are nowhere near the ability where the internet is today. We just pull out our phone and make a mobile banking transaction payment. We're starting to see some of these technologies go into production, but we're not there yet. So the question is, I can't sit here today and tell you, I did show you Arcade City, and we'll talk in a moment about some more of these, but I can't sit here today and tell you exactly how this is going to apply in your business right now. But this is when it makes sense to start thinking about applying these technologies in your business. When multiple parties share data, who shares a lot of data? Multiple parties? Governmental agencies. When multiple parties update data, healthcare, credit records, agencies like the government who have to record vehicle titles. I mean, you in the room probably have better answers to this to apply in your business than I do. When you have to verify identity, I spend a lot of time in the banking world thinking of AML and KYC. Are the people you're transacting with really the people you are? Intermediaries add cost and complexity, and transactions are time sensitive. Those are kind of the 5 elements that most of the major financial institutions are looking for when they're saying, are we going to apply a blockchain type technology to the use cases that we have in front of us? That's when it mostly makes sense. Who's spending a lot of time and money in this area? Well, you look at the growth rate of funding in this. So that number is approaching $1 billion right now. That's probably a little understated. This is what the research, the public research that we can find, talks about in the area. This is what we're talking about. So I spoke to you about Arcade City. I keep referring to Arcade Fire. I think Arcade Fire is one of the bands my kids love. We talked a little about the auto industry. One of the problems I think most of you remember after the tsunami and the floods in Thailand in the auto industry was the inability to understand the impact in your supply chains of suppliers who weren't tier 1 and tier 2, but way down in the supply chain in the auto industry. It caused massive disruptions and shutdown, and massive disruptions not only in the auto business, but actually corollary in the business interruption and the contingent business interruption in the insurance industries, right? Because there were a lot of policies written that the insurance industry had no idea how deeply down the supply chain they were covering. And one of the areas that a lot of people are spending time on, 2 companies, SKU Chain and a company called Eris, are focusing specifically on this use case, is the ability to bring a lot more transparency to the supply chain in the auto industry and industries in general, although auto, I would argue, has one of the deepest supply chains in the world, right? So let's picture this use case. You've got someone manufacturing a bolt in Thailand, in the jungles of Thailand. And that person is manufacturing bolts for a wide variety of industries. And it is very unclear when that bolt is ultimately going to find its way into a finished transmission that will ultimately make its way into one of the major OEM's cars. And the problem is the manufacturer, the OEM, doesn't really understand how dependent his supply chain is on that bolt manufacturer, because he's not buying anywhere near that bolt manufacturer. He's buying a sub-assembly, that's making its way into a tier. He may know that there's a tier 3 supplier in that chain, but he has no idea how dependent he is on it. So blockchain actually, not just in auto, but in many other areas, things like food, right? The dependencies of monitoring things like the provenance, whether something is GMO or non-GMO, whether something is kosher or non-kosher, whether something has dairy or lactose ingredients in it. So the ability to monitor things, the provenance of things like artwork, all the way down a supply chain, the ability to know the identity of counterparties that are going in is an area that people are spending a lot of time in. That's an impact in the industry. I'll give you another area people are actually spending a lot of time in: trade finance. I'm working with some of the largest technology companies in the world, believe it or not. And this is, a lot of auto companies have been looking at this as well, but now technologies are looking at it, which is, how do I help my downstream suppliers who may not even be privy of contract with me? How do I help my downstream suppliers finance their businesses cheaper so that they can lower the piece price goods that are coming into my supply chain? How do I help those people get parts to me better, faster, and cheaper when they may not even be in privy of contract to me? How do I help them so that I can not only help suppliers, perhaps in third world countries, get their businesses to scale, right? But get them better terms so that perhaps they're not financing their businesses at usurious terms because they can't even prove that the provenance of their goods are actually going into a major OEM's business, because all they are is a screw manufacturer, right? Their screws may be going into, Boeing airplanes and Toyota, GM, and Ford cars and 4 other different applications, but they have no way of proving that because they're so far down removed in the supply chain. So that's one area where things like blockchain technologies are served to be playing out. Company called Ubiquity LLC, very near and dear to my heart. Not the company, but the concept. What are they doing? Well, they're helping little boys whose mothers have them stuck in Register of Means Conveyance offices in Charleston, South Carolina, right? They're a company who is focusing on title insurance and title registry. Another use case, it's getting a lot of attention. Health records. Health records is an area that I think we all know not only in this country, but in this world, is an area that is certainly ripe for, I wouldn't call it disruption, but massive overhaul, right? We own our health records. We should own our identities. We should own our privacy, yet we don't. We don't know who has our information, who it is being shared with, how it is being monetized, and the ability for us to decide where it's being used, how it's being used, when it's being used, why it's being used, is a use case that many governments, the Estonian government has been working on this since 2011. Actually, so this has actually gone into production in Estonia. There's a company called GEM, and GuardTime is the one working with the Estonian government who's using blockchain in health records. So this is a very, very impactful area that we think that blockchain technologies are going to work on. I have a son. I have a few sons. I have 3 sons. And I have one of them is my favorite, but it depends on which day of the week it is as to which one it is. But I have a son who's in the sneaker business. And I didn't know that this was a business, but if any of you have teenage boys, there's a whole business out there buying and selling sneakers. And these are sneakers that have provenance associated with them. There's limited runs. Nike may put out a limited run of 2011 LeBrons. And the problem is there's a lot of counterfeiting in the sneaker business. And I've often driven my son to rather sketchy areas to do a sneaker deal, right, where somebody will want to buy these sneakers and sell these sneakers, and I don't know who he's transacting with and whether he's buying a legitimate pair of sneakers or not. There's even blockchain companies out there who are looking to decide on the provenance of sneakers. And whether the sneakers are in fact legitimate, and then you can transact business through a blockchain-based technology to decide whether the sneakers are A, legitimate, and B, whether or not the payment should be made through a blockchain-based system. And one I think we're all kind of interested in these days is voting technologies. Both in Utah and Texas, some of the political parties, although not the mainstream political parties, the Libertarian political party and others are starting this year to use blockchain-based systems because identity and trust management are areas that it is ripe for using blockchain-based technologies. I've actually stayed away quite a bit from the financial services ones because those are the ones that are most being covered. The company called Digital Asset Holdings, who PwC is one of our strategic partners, has been named by the Australian Stock Exchange to help them replace their post-trade settlement activities. That's a big deal. That's not a minor deal. That's replacing the entire post-trade settlement system. Many companies are looking at they're majorly investing at replacing the entire syndicated loan system. Syndicated loans are a very antiquated system requiring hundreds of people in the back office to manage faxes. manage signatures. These are things that are not required. We do not need hundreds of people managing these processes. They are antiquated and prone to error. Blockchain systems are excellent for managing that. So I can't stand up here today and tell you that next month in the auto finance industry, you will find to wake up and your jobs, the way you do underwriting, the way you do servicing will change overnight from blockchain. What I can do is start by telling you that a company like Arcade City is already gaining traction in the ride-sharing world, that people are already looking at processes and systems like the world of underwriting, like the world of credit reporting, like the world of payments, certainly getting a lot of traction in the world of blockchain. And to tell you that in many areas of our lives, blockchain will come to impact it, much like the early days of the internet. So this is definitely an area where I think people, will wake up in a few years and say, I'm glad I spent some time on this early. I'm glad my IT departments started investigating this, running proofs of concept, keeping an eye on the early innovators on this space, and integrating these technologies into my organization. So I'm happy to take questions on this if you have any, and happy to take questions off the stage if there are. Over here. So that's unique to the Bitcoin blockchain. There are many different. Bitcoin blockchain is one of the protocols that can be used in the financial services world. This is a fairly technical question over here, which is whether the world will use the Bitcoin protocol. Actually, in financial services, we have many different use cases that are not based on using the Bitcoin one. So I actually don't have a dog in the hunt as to whether or not that should or shouldn't go that way. I'll leave that to the theoreticians in the area who particularly are going to debate whether the Bitcoin blockchain is going to be the one that will, I wouldn't say survive. My belief is that much like many technologies, there will be a handful of diffuse use cases, or diverse and diffuse use cases that will develop ripe for a particular industry.
In the beginning of your presentation, you talked about comparing the data amongst all of the databases simultaneously, and if there was any incongruity or inconsistency, you knew somebody was lying. And I may have missed it later in your presentation, but then what? Then
how does that work?
If someone's lying, what happens?
Then the transaction isn't valid. Then that is exactly the point of the blockchain. It means that transaction is not valid. Somebody's trying to post an invalid transaction to the blockchain. No, you don't get to ask a question, Chris.
Too late. You already called on me.
I didn't see it was you. The lights were blinding me.
So you work for an accounting firm, and we all pay big audit fees. When are our audit fees going to go away because of the blockchain?
So that is one of that. So you ask why? One of the things that yes. So I'm a partner at PwC, and one of our largest areas, obviously, is our accounting practice. And certainly, it's an area where we think is highly susceptible to disruption, because when you think about the traditional accounting business, right? You have a vast, there's auditing and then there's accounting, and when you have to go out and check to see whether, in fact, a shipment of goods was shipped and a receivable is good on, is in fact good on somebody's books. That is a very manually intensive process in the world right now, and that is actually something that I would say, if you want to get hyper technical about it, that is a manual process because companies are not on the same ERP system. Right? Everybody's got their own accounting system, right? And so the fact that those accounting systems don't talk to each other in the world, it means that somebody books a receivable and somebody books a payable. And if everybody's payables and receivables systems talk to one another, and I could go in and just test the underlying controls of those two systems, then I might not have to go check one another. So if there was a blockchain-based system where everybody in the world was on the same receivables and payables system, then yeah, that might actually materially change the world. In terms of what the accountants, what we actually are doing at the auditing the transaction level. So yes, I agree. And there are a number of companies out there who are looking to disrupt that space.
Last question.
Sure. It comes with your conference fees.
With respect to payments, right, not contracts and the other stuff we talked about, today, if an auto finance company wants to offer something that's a little bit non-traditional, right? I guess today, in your mind, is it as simple as telling them, go get a BitPay merchant account? In your mind, if you said, tomorrow I want to start offering more alternatives to payments, I know in the future there might be other currencies.
Yeah, I
other
don't think you're going
things
to get, yeah, so my personal opinion is I don't think you're going to, you're not having customers clamor down your door asking to pay in Bitcoin right now, right? So I think like many things in the world that I live in, the opportunities are in the back and middle office, right? So how can you, A, give a better customer experience through cutting out systems that can speed up processing times for customer, can give them whether it's things around identity management, things around underwriting processes that are perhaps antiquated, doing certain things better, faster, and cheaper right now. So if I were an auto finance company, I would look to see where I could do my middle and back office system processes better right now. All right. Well, thank you everyone today for the time. I appreciate it. And please feel free to let me know if you have any other questions.